Hello guys. Welcome to our 145th edition of Trading Opportunities webinar. Before I begin, let me just quickly check the audio at my end if it's working or what. Well, it looks to be working with my end. And if you guys are listening to me live in the on the YouTube or LinkedIn page, let me know in the live chat as well. I can see a gesture from Manuel. So before beginning the webinar, let me give you a quick introduction. This is a weekly market update series called Trading Opportunities, wherein I discuss different markets, including Euro USD, crude oil, gold, SPX, Nifty, and sometimes BTC. And so far, in the last 143 webinars, which were all connected live on YouTube and LinkedIn, obviously, we have captured a total of 364 trades. We will see what happened with our last discussion, what worked, what didn't work, etc., etc. And those of you who are watching it later as a recording, we go live every Friday at 10 p.m. IST and 4:30 p.m. GMT. So whichever time zone you are in, just convert it accordingly. So if you want to join us live next time, there you can just match your alarm or notification reminder or something of that sort. That's about it for this webinar series. Other than that, I do have a beginner to intermediate level course for beginner to intermediates, of course. It's called The Complete Guide to Professional Trading with Elliott Wave. You can check out the link by visiting 50hours.com and checking out the link in the middle. Other than that, you can check my track record of industry leading accuracy of 80% plus for 6 consistent years by visiting this page 50hours.com/forecast accuracy. Everything is mentioned, well documented. Whatever I've done publicly is here. And lastly, if you want to receive updates of my work, weekly updates, etc., etc., you can just subscribe to the emailing list completely free. And those of you who are interested in further follow up other than this webinar, live trades, live analysis, they can request details for my Slack private group here. That's about it for this is the link. That's about it for the introduction and stuff. I'll not waste any time and just to give you the idea of how we will proceed, we will first discuss or look at the last webinar's recording on euro. Then we will discuss the actual live chart of euro. Same goes for crude, gold, etc., etc. So that will be our modulus operandi. And with that being said, let's now head over to actually check out the last recording for euro. So here on screen, I have opened up the last webinar, the 144th webinar, and we are currently checking out the chart of crude oil. And this is the main theme, I believe, or one of the main themes which we had discussed. Always turn the quality to 1080p because the black background only looks good on that. And those of you who find that I'm speaking a little bit fast, definitely use the speed option here if you are watching it as a recording. If you are in live chat, then yes, you can let me know and I can, you know, slow down a little bit if that's an issue. But for recording, it should not be an issue. Anyways, so what we are seeing over here, I'll just pause it a little bit and just show you what we are discussing here. The basic theme remains that we are looking for a correction in wave 4. It is either complete or may have some more price action remaining, but the main theme was whenever it's complete, we look for sell setup and so on and so forth. I have discussed the analysis and setup, etc. But this was the direction, the downside direction is what we were looking to play. If you want to see the whole thing in detail, just check the whole analysis. We are not going to waste any more time on that. So here's the live chart of euro. Last time when we discussed this SPX, we'll look at it in a bit. So last time when we discussed this chart, it was trading at 1.05687, as you can see over here. Now, at that point in time, the date was 6th of December. And now we switch to the live chart. 6th of December is here, and the market has kind of proven our point that this is possibly a wave 4. It's not completely still clear. So what I'll do is zoom in here and just discuss all possibilities here. So first of all, the possibility of wave 4 is the main theme still. And yes, guys, I can see the audio is working at my end and I can see some people are in the live chat. Just let me know for a double confirmation. I'll check once again. Yes, it's working at my. Anyways, if you guys are in live chat, let me know and give me a double confirmation about the audio and visuals. Everything is running, etc., etc. Well, I'll continue. So first of all, here we can see wave 4 which we are discussing. From this point of reference, we are assuming that this market is going up for a 4. Previously we assumed that the 4 is complete here, and the market should give us bearish price action, and basis on that analysis I have actually entered short trades. Let's just very quickly see some of them, or not some of them, the update for it. Where is added minor shorts on December 10th? So that was the analysis at that point in time. Let's head back to our current chart. Now, the first assumption remains the same, that we are seeing a wave 4 which is completed over here at the price level around 1.06296, in which case we are good to assume this as our new point of reference, and from here on we will look for a 5 leg progression down, either an impulse or a diagonal. And in this particular case I have assumed that we are seeing indeed a, one second, which one is it, like this? Yes. So we are here seeing a possible diagonal in the wave 1 of the 5. So those of you new to the Elliott Wave terminologies, I'll just like to mention that once we see completion of the 4th wave, the next leg down will have 5 legs in it, which can look like this. The other scenario is called a diagonal, but we are here assuming that it's possibly an impulse, in which case this will be a 1, this will be a 2. In this case, this will be the 1 possibly here or here. Both scenarios are possible, and this will be a 2. Once this wave 2 is complete, we will see further leg down. So now in this current market scenario, the wave 2 may have completed here, which would mean this market will just continue downside, and that's why I'm currently holding my shorts. Second scenario would be that this wave 2 has some more price action remaining to the upside, in which case it will go a little bit higher before falling. You can assume the 50-60 as the target level. We don't want to do that or check that. We just want a rough idea. So we can assume that the market can go to 1.05473. Why I'm taking the rough idea is because it really doesn't matter. The analysis remains the same if it goes to 50 or 60 or a little bit higher as well. As long as it stays below this level of 1.6204, it remains the same. The analysis remains the same. So anyways, this market can either reverse from here, that's scenario 1, go up and then reverse from there, that's scenario 2. So basis on that, we can say that our H1 and H2 are both kind of aligning. One is suggesting straight down, one is suggesting minor up and then down. So we are more than happy to say that we are looking for a swing short perspective, and that's why I'm holding the shorts on this counter. Let me see if there's any other outlook to play. No, I have 2 counts which I've discussed here, and I am holding the bearish view here. Of course, if I'm wrong, the stops will be around 1.06044, this high basically. So I'm not mentioning the exact level because we are using this data feed, you are using possibly some other data feed, and hence the levels may vary a little bit. So I'm seeing this as the bearish scenario, and I think that's about it for this analysis. Let me know, guys, if you have any doubts or questions. Hello, Manuel, and I can see a lot less activity in the chat. Am I not audible? How are things there? Say hi, hello, guys. That will make this webinar a little bit more interactive and perhaps a little bit more interesting. Anyways, so since I can't see any doubts, I'll wait for a few moments and then move over to the next chart, crude oil. Crude oil, we actually haven't changed anything since our last discussion. And last to last discussion, everything is more or less the same. The analysis is what it was. We are expecting sideways movement for wave B, which should be followed by a leg down for C. And this sideways movement can either propagate within this boxed range or it could have already completed. So since nothing has changed, I won't take too much time on it and just have a quick look. That's the main view we are playing or looking at being played. We are assuming that this E is still continuing, and I have a small short position on it, a swing short position, which I'm still holding. And the idea remains more or less the same, that if this is a wave E in play, then as soon as the E is complete, we look for bearish activity or bearish movement. And if we are wrong, we will look to close the positions if we see the market go above 76.214. So more or less still the same thing. And here is one opportunity worth pointing out, that this market can give us swing short trades above this level of what is this 71.80. Once the market goes above it, if our analysis holds, it can turn anytime. So we can look for swing shorting opportunities if we see some clear reversal here. But this is a daily chart. So to play such an opportunity, you will need to look at it in much more detail on lower time frame. So that's just an idea I'm giving. We can't discuss that kind of play week ahead or days ahead. We'll need the live price data. So kind of thing which I will look to update in the private Slack group, but more or less idea remains the same: sideways and then down, or I mean little bit up and then down, or sideways within this box range and then down. Wait and watch on CL. Swing perspective remains bearish. I've discussed the invalidation. So without any further ado, let's move over to the chart of gold. Here is the recording from our last webinar on gold, and let's see what was being discussed here. So let me just go forward a little bit and see all possible outlooks that we discussed on gold in our 6th December webinar. I guess we are looking at a range, and we are assuming that wave B may still be continuing up. Let's see if there's any other view. So wave B continuing up and then down, or straight down, both possible. I remember I had a position on which didn't work out. Let's see. Okay, so that was the main discussion. We are looking for a wave B which could be complete, could have more upside remaining, and then we are after that looking for a bearish leg. Now things have changed a little bit in gold. I have updated the counts, and I haven't taken any other trade other than the last trade which we had, which didn't really work out. So it requires a detailed look. So here we are on the live chart of gold. Let's see what has changed. First of all, let's determine the price. Last time when we were discussing this market, the market was trading around 2639, and now the live chart is trading around 2726. So our assumption of wave B continuation is kind of what's happening, and what I have assumed here is that from let's just start from here. Let's from this point of reference, 2721 on 23rd November, we possibly have A and B and C. So that B which we were assuming may complete here is what took the market till there. So a little bit further than expected, actually quite a bit further than expected. Now, if that is the play, then once this wave C completes, we have a possibility of up leg for the Y. That's one of the counts which we are following. Kind of encapsulates our idea. More importantly, at this point in time, if we move our point of reference to the last leg down at 2726 on 12th December 2024, we can see a clear five-way progression. Now, those of you not very familiar in Elliott Wave terminologies, this kind of progression is what we call an impulse, and it is quite clear, which is suggestive that possibly the C leg which we were talking about is complete over here. If C is complete, then X is complete, and then upside movement can start. Now, keep in mind that's just a possible outlook. There are other scenarios which can play out, but it is looking very strong, and that basically means we can look for intraday scalp longs. But then again, that's not the kind of thing I can discuss in too much detail here because that will require a more detailed analysis. We don't have time for all that kind of discussion. But the idea is basically this: that if this count is correct, then we can see a movement which can take this market above 2726 to 2750 and 2764. And if that really happens, then scalp longs within this leg, or anywhere in middle should be something we can trade or look out for. So simple enough, we like to trade short term as well as high time frame. In the high time frame perspective, we would like to ascertain that this move is complete. One idea would be to wait for the market to take out the level of 2690. Once we see a move over to 690, we will look for long trades. That's the main theme or conservative idea. Once the market is above this level, we look for longs, and after these longs are established, we then look for short-term trades within this upcoming wave Y, which will have three waves in it anyways: A here, B here, and C here. So that's the projection. That's the trade setup for swing. Let's call this as H1. We look for long trades here for H1. H2 is suggestive that we don't have the confirmation yet, so maybe some downside before up. But that's not really much of an issue here because we are only looking for longs after this marked level is crossed. Actually, not even just the level. We will look for the price action to sustain above the marked level, and then we will consider longs from there. With that being said, we have now covered our outlook on gold. I think I have done quite a detailed analysis, and further complexities suggest after the Y is complete, a strong leg down can be seen, but we will see about that once we reach that point in time. And I'll take a few moments here before we move over to our next chart. Those of you who are watching this as a recording later on or live with me, do not forget to hit the like button, and of course share this content with your friends and colleagues who are into the markets and you believe will find this content helpful, so that we can reach the right audience, right? So here, let's move over to the chart of S&P's 500. Let's just quickly see what was being discussed in the last webinar before we head over to the live chart. This is the discussion from 6th of December. Let's see what was precisely being discussed, or the counts being discussed for S&P. So we were looking for 6110 as a resistance, and once the market is around 6110, we can see a reversal. Actually, we were looking for wave 3 down. That was the main theme. And the second idea was that if the market sustains above 6110, then we can look at a straight up upward movement. Let me see if there was anything else. Not really. So yes, that was the main theme. We look for 6110 as a resistance level and possible reversals from there. And what do you know? The market seemingly has listened to us. There it is, 6103. Actually, it didn't even go to 6110. It remained, I think, let's check, 6085. 6085 on 6th December. So our point of discussion was perhaps somewhere here. Somewhere here, I'm assuming. So from there on, the market did made an attempt, but did not succeed in taking out 6110, which is roughly speaking 8 or so points above the recent high of 6th December. From there on, we seem to have exceptionally clear progression. Okay, I had to take a short here. What I'll do is just wait a moment, guys. I'll just put on a short position here because it kind of is meeting our requirements, and then we'll discuss the actual setup with you guys here as well. All right, done. So let's see what's going on here. What's the basis of this short trade? So first of all, as we discussed last time, our assumption remains that from this point of reference around the price level of 6032, we are seeing a possible flat, right? And that possible flat is perhaps having the wave A here, perhaps the wave B is here. There is the possibility that wave B may have some more upside remaining that doesn't seem to have played out. So we are going to just stick with the possibility at hand, and that is that wave B is possibly here, and that means the C leg is remaining. So what do I mean by this B's and C's and stuff? What is this mumbo jumbo? So let me just explain that by giving a rough picture of this progression. So from this point of reference, let's just draw it in this rough area. So this is our point of reference, and what we are assuming is that the market is going lower up and then should go give another leg down. So this should be what we call an A, this should be what we call a B and a C. This is the minimum requirement. Of course, these patterns can become much more complex, and what I'm basically giving you is a rough outlook, a simplistic view of possibly a very complex situation. So the simplistic view basically suggests that the six C leg down is possibly still remaining, and since this C leg down is possibly still remaining, that is why I have entered shorts. In this particular scenario, the C leg seems to have completed the first and the second leg. Generally, it has 5 waves. It always have 5 waves, perhaps as an impulse, perhaps as a diagonal. In this case, if the first and second are complete, then we expect roughly this kind of a outlook. Obviously, these things are not precise. I'm just sketching out a rough trajectory to give you a rough idea, a general idea, I should say. So if this count is correct, then this is the expectation, and based on this expectation, I have added shorts. Where will I look for booking the profits? I can figure out some targets, but I can see that it will be better off to consider this level as important no matter what other Elliott Wave targets I come up with. 5990 should be a level to look out. And other than that, of course, once I see the market move below 6023, I'll probably just trail the whole thing, and the stop loss in this particular case should come at 6078. So the idea is very simple. As I just discussed, we keep a technical stop around 6078, and then we expect to see a movement in wave C, just like this. Should change the color for it, like this. And if we do get this kind of movement, then we will continue to trail or possibly figure out the targets and book some profits. Otherwise, if we are wrong, we look to exit around 6078, perhaps even before it, if the market tells us to. Right? Actually, the actual stop loss should be 6094, but I do not think that's really a required level. I'll probably put it a little bit above 6078 to give it a wiggle room, unless because that brings us into a situation where someone hunting for stop loss at known liquidity levels may take out our position. So just to avoid that, we may do that. But other than that, the scenario holds, the analysis holds, and if you guys are in doubts or questions, you can just let me know. I'll take a moment here before we move over to the last two charts, Nifty, which will be followed by BTC. And I'm not sure what's the matter here because the audio is working, but I'm seeing more or less no live chat here. Where are the live audience today? Are you guys all going to watch it as a recording? It's very unlikely. So there finally someone is in the live chat. 1 second, guys. Let me just start for a moment with Nifty, and then we will go over a little message which we have in live chat. Very less activity today compared to all this stuff in our last webinar. So here I have the chart of Nifty in front of me, and let's see what was being discussed. I want to get to the point which was the main theme or the main hypothesis for this chart so that we can then build on top of it. Where is that? That's too short term. I'm looking for something in the middle. So we have two ideas here. It looks like one is suggesting straight down, one is suggesting up, and the bearish possibility has more room, like it can take the market quite lower than the marked level on this chart. This is discussion on 15-minute chart. Let me see if something else is discussed. This looks like discussion on very short term time frame, which is suggesting bullish movement. So can't put, generally I do conclude the analysis with an H1, H2 or something like that. It doesn't look like I have done that there. So short-term analysis was suggesting upside movement from 24669. Let's just take it for what we can see. And after that, we were assuming higher time frame, the possibilities of strong wild moves ups and down. So let's stop it here. If you are interested, just check the whole thing at your end in your own time. I just want to go to the live chart now without wasting any more time and discuss things from there. So here is 6th of December. 6th of December here. And we were assuming something like this, I think, right? And the other idea was down, up. So it looks like clearly none of these things have seemingly played out as we expected them to. And that makes us want to look at this chart again and see what's really going on. So let's have a look at it from this point of reference and see the updated outlook here. I have now updated the counts to assume that we are seeing a wave 1 possibly here, a 2 here, and then again a wave 1 and then a 2. So for those of you new here, I'll just like to explain. And yes, let's not miss the message here. Good evening to you, Dylan, or Atibat, I should say. So as I was saying, we are assuming that this is a strongly impulsive count, in which case if I move this chart to the left hand side, I can now point out the real idea which I'm thinking might be playing out here. We are assuming that this is going to go up as a third wave, and in an impulsive five-wave progression, the third wave will have 5 waves inside of it. So basically, if we magnify this thing, we are going to see 5 waves inside of it, which we can call it as a lower degree count. In this particular case, we have the one complete here, two here, and as you could have guessed, we are assuming that the lower degree count is this. So that brings us to a very good position. It's a position which you want to be. We are in third of the third if this count is correct. And the third of the third is generally the strongest move in the market. If it is the one which we think it is, then we can expect some good returns or fast movements, swift movements from here. Specifically, I was looking at constituent stocks as I generally do, and I can see some strong activity forming in HDFC and ICICI Bank and some other banks as well. But it is suggestive that banking sector may be leading this whole thing. Again, we don't discuss specific stocks, but you can get the idea putting the index Nifty and then putting those individual stock charts together. You can get a picture of what I was pointing at. So, long story short, in case of Nifty, we are looking for breakout long trades, nothing very fancy here. Simply, if we see move above 24838, then that basically means that this market is giving us a breakout, and then we can look for longs from there on. Technical stops are around 24187, but of course, you don't have to put them that lower. Depending on the price action, we can figure out something in the middle and a better risk to reward for that matter. And the progression, as you can see, if it works out in our favor, then it should be something like this. Now comes the matter of the targets. If this really is what we think it is, then the market can go anywhere to the upside. It's open to new lifetime highs, but obviously we want some short-term levels to keep in mind. So the short-term incoming resistance is within this range of 24. What is this? 970 or 73. Let's call 970 and upside at 25 to 20. So within this range, we can expect some resistance. And obviously, if the market does not behave does not take up any resistance in this range, then we can expect the market to fly from here as well. So because it is suggesting strong upside movement. Again, keep in mind, this is a view at this point in time. The market may just very well just go a little bit up and change the count, or just go straight up from here. Everything is a possibility. All things exist in this on this chart, and at this point I am assuming that even if our long term count does not play out, we are assuming that in the short term it should give us some play for the upside. So short term wise, only keep in mind. Long term wise, we will have to look at it again. That's about it for our very quick little outlook on Nifty. And since I'm not seeing much of a participation, I won't wait any further, and let's head over to our last chart of BTC. The discussion was very simple on BTC. Last time we discussed that wave 1 up, 2 down, and 3 up is the expected play, and we wanted to see the price take out 103000, which was a resistance level. As long as the market is moving below it, we do not want to initiate long plays, and if somebody had long plays, we discussed the levels for support. Let's now head over to our actual live chart and see how far things have progressed. As you can see, the market has not really made any real progress. Nothing has been triggered, neither has it gone further lower than the established possible wave to low around 91,925. Neither has it taken out the high of 103,250. So the play is literally the same. We expect that not expect, we wait for this market to go and take out the upside level of 103250. Let's see exactly 103. Yes. Keep in mind, we are using this data feed. If you are using a different data feed, then the price levels will vary a little bit. And 103250, once this level is taken out, that is the market goes above it and establishes itself above it, then we will look for some long plays on this counter. That's basically it for BTC. We have discussed the upside target levels already. 131576. I'll just say 130 as the upside level, which we are looking on as minimum target for BTC if this strong trend continues or decides to continue and this count plays out. And I think that's about it for BTC. Right. With that being said, we have discussed all the main charts that we follow in every single one of our webinars, and we don't have anything else to add to this discussion at this point in time. For those of you who stayed with me till the end, thank you very much for staying till the end. And if you were enjoying the content, all those who are live as well as those who will be watching later on as a recording, Do not forget to hit the like button, and much more importantly, do not forget to share this content, because after all, we want to reach the right audience as fast as we can. And your contribution by hitting the share button and posting the links on social medias like Twitter, Facebook, Instagram, or whatever social medias, groups, etc., you have, is really required. We don't want to always remain stuck below 1,000 views. That's just not cool. Right? Says the guy who likes to have more views. Anyways, that all being said, I'll see you guys in the next one. Bye, Manuel. Bye, Dallin. And take care, guys.